Welcome to Furniture Industry News. Today is August 2nd, 2024. Let's dive into the latest updates in the furniture industry. New residential furniture orders fell by 3% in May, marking the second decline in 12 months. This drop follows an impressive 22% increase in April, suggesting a possible normalization in market trends. However, orders still show a 6% year-to-date increase, which is a positive indicator for the industry. Shipments were down slightly by 4% compared to last year, and the backlogs have decreased by 6%. Inventories and employee levels remain stable, but are slightly lower than in 2023, reflecting aligned operational levels. Despite the dip, the general consensus is that consumers are cautiously optimistic but anxious about the future. Economic indicators are mixed, and factors like potential interest rate cuts and ocean freight rate changes are contributing to this sentiment. All in all, while there are challenges, there's also a sense of stability that allows companies to manage their operations effectively until more favorable conditions prevail. Mattress Firm saw a noteworthy performance in the third quarter, maintaining stable sales while reporting a remarkable 71.2% increase in net income. Revenue for the quarter reached $981.7 million, and net income surged to $32.2 million, compared to $18.8 million in the same quarter last year. This significant rise in profitability highlights the company's strong financial management and strategic initiatives, despite a slightly dipping sales figure. Conn Incorporated is set to be delisted from NASDAQ following its Chapter 11 bankruptcy filing. The stock will be suspended starting August 6th. This move underscores the financial difficulties facing Conn, which has struggled to maintain its market position amidst increasing operational challenges. The decision not to appeal NASDAQ's determination aims to reduce expenses and maximize the value of its estates. Leggett & Platt swung to a staggering $602.1 million net loss in the second quarter. This hefty loss stems from sluggish demand in both the bedding and furniture markets. To tackle these challenges, the company is undergoing a significant restructuring plan. This plan includes closing between 15 and 20 factories throughout its network. Despite the tough financial hit, the company is committed to investing in its core businesses and driving profitable growth when market conditions improve. CEO Carl Glassman emphasized that this plan aims to create a more focused and profitable future for Leggett & Platt. Ethan Allen reported a decline in sales and income for the fourth quarter, closing the fiscal year on a slower note. Sales dipped by 10% to $168.6 million, and written orders also saw a slight decrease. Despite the lower sales, the company's gross margin held strong at 60.8%, only a minor dip from the previous year's 61.5%. CEO Farouk Kathwari highlighted that the company remains financially robust, with total cash and investments rising to $195.8 million. Additionally, Ethan Allen announced a special cash dividend of 40 cents per share along with its regular quarterly dividend. Havertys reported a significant decline in both revenue and net income for the second quarter. Sales dropped by 13.4%, underscoring the continued challenges faced by the home retail sector. Despite efforts to stabilize through strategic initiatives, the company is still navigating rough economic waters. Sleep Number has shown notable financial improvements this quarter. Despite an 11% drop in net sales for Q2, the company managed to boost its gross margin and reduce operational expenses. Additionally, Sleep Number saw a significant increase in free cash flow, demonstrating the effectiveness of its cost-cutting and efficiency measures. Wayfair's Q2 net revenue fell by 1.7% to $3.1 billion, highlighting cautious customer spending. However, it's not all bad news, as the company saw gains in active customers, rising to 22 million, and an increase in repeat orders, with 81.7% of customers placing orders again. Despite the challenges, Wayfair continues to hold strong in its online retailing efforts. Amazon reported a 10% rise in net sales, hitting $148 billion in the second quarter. Notably, online store sales increased by 5%, reaching $55.4 billion. The company also spotlighted significant growth in its Amazon Web Services segment, which saw a 19% year-over-year gain, underscoring the ongoing expansion and importance of their cloud services. Beyond Incorporated is making strides to reduce debt and improve cash flow, a major focus as they aim for profitability. They're implementing a global loyalty program and ramping up their liquidation business for overstock. This strategy aims to harness customer loyalty and capitalize on excess inventory, positioning the company for future growth. XPO saw a revenue rise of 8.5% in Q2, driven by higher yield in the North American market. The company's adjusted operating ratio improved significantly. Operating income jumped to $197 million, up from $107 million last year. North American LTL revenue rose by 12% to $1.27 billion, showing strong performance and efficiency gains. A small Amish furniture manufacturer in Indiana is ceasing operations this fall, citing multiple operational challenges. Thank you for your past business and sorry for the inconvenience. That wraps up today's episode of Furniture Industry News. Make sure to subscribe to stay updated with the latest industry news. See you next time.